Good evening, this is GBPUSD. I'm the NSHO. You can find at the blog FibonacciStalking.com. Also posted regularly on Twitter using the Fibstalker nickname. Good evening. Today is Sunday, February the 3rd. It's the February the 3rd, 2013, and it's 8:30 p.m. Italian time. This video is the Fibstalker view on currencies. This is part of my free weekly newsletter, and in this video I'm going to review very quickly the for forex pairs, the USD, US dollar versus Japanese yen, the pound versus the US dollar versus the Canadian dollar, and the Australian dollar versus the US dollar. So let's start from the Japanese. The US versus Japanese yen. What you see on the screen is the weekly chart of this pair, and this pair has been on a rip in the last few weeks, as you can see here. And this pair is shows a strong devaluation of the Japanese yen against the US dollar, and this is part of the current war scenario, the currency wars we are witnessing between countries in order to keep their currency as low as possible to be able to export in a world where consumption is low and has moved lower since the beginning of the crisis in 2008. So what I see on this chart, it's very difficult to read this chart now based on my method. This is an emotional straight up move, and it's coming. It will come to an end, but my method is not able to say when this is going to happen. What I know is that should a move lower start, let's say next week, and continue, this would bring price into the 89.20 level, and that would be a support level for this pair. So at least at the first target. So that's the only thing I can say on this. On the weekly time frame. Moving on the daily time frame, we had some nice move till the point where this pair stayed reasonable, and program trading is also was actually working fine. As we can see, we had a sequence of extensions, and then we start having some variation on this theme, and that's where things get more difficult. So we have this traditional move higher, bringing price into 89, and then again we had another traditional move here. So we went from extension to traditional, which is not very common actually, and shows that the market is not ordered anymore. The good point, I would say that the good point is that program trading is also having problems with this pair. So what I can see here at the moment is an extension higher on the daily chart, and this hit the first and second target. As we can see, we had support in the 90-40 area here, and we hit 91.60 and 92.20. Now, if this sequence of moves continues higher, I would expect now support next week. If we get a little bit of weakness here into the 92.10, 92.20 area. However, I will not trust this level. If price goes below 91.90, I cannot trust the beginning of a reversal. Maybe we could, if price went below this other level here, when below the 91.30 level. So I'm going to watch this level, and maybe weakness will start if we get below 91.33. So moving to the pound, what you see on the screen is the weekly chart, and we have two levels here. We have a level of resistance, which is very clear here, and it has been pushing price lower since basically 2009, and this level of resistance 164.20 area is also acting as a resistance in the last few weeks On the other side, on the other hand, we always had this 152.70 area, which acted as support in 2011 and beginning of 2012 twice. So we might be headed towards that level. Let's move to the daily and let's see what we have here. On the daily, we have been watching lately this level of support, and against this level of support, although it was not respected, the actual level of support, which is the 50% here in 157.80, was not respected, as we can see here. The price sliced through it, and bulls apparently were able to defend this 156.65 here, but we got this huge candle lower here, and with an expected strength in the dollar index expected, which I anticipate for the next maybe 2 to 3 days, this pair could keep moving lower. So at the moment, I have two scenarios for this pair. One is that we are going to complete this busted setup here in the 158.70 and bringing price into the 156 level basically, and after that we will start to move higher, and this could actually work with the time frame we have. I mean, actually this does not work very well with the time frame we have for the dollar weakness here, so that's an issue I have with this scenario. But I think so excuse me I think we should see 156 very probably, whatever happens. Another possibility is that we are trading this old extension short here, and this would bring price into 156 first, but then also continuation towards 154.50 area. So be very careful here with longs. I don't think it's time to go long this pair just yet. Moving to the US dollar versus the Canadian dollar, this pair also has a setup short here, which means additional dollar weakness, and on the weekly chart we can also see two opposing measure move here. The first one would be a short, and I will elaborate a little bit more on this. This short actually worked at the very beginning. That's located at parity basically, and it was able in November to bring price lower, but price was brought into the all-the way halfway back here, and we know that this acted as support, although not cleanly here, the 098.50 area, which was able to bring price higher again into this resistance area at parity. Now the daily chart tells another story. I mean, it tells clearly a story of a short going on, and it was a confirmed short on the daily chart as well, as I'm going to show you, because the sequence of measured move higher that we saw at the very beginning here actually failed, and we can see this that was actually a move higher here, and we hit first and second target here, but then on the continuation we were not able to hold the continuation of measure move higher into the weekly resistance. So we started this move lower, and this is a sequence of measure move lower, and as we can see, the first one traded at 100.50 here and brought price into the first target, and then we had a second measure move here trading, which stays from previous highs to lows, and as you can see, this is trading at the moment. This is going to bring price well past the is going to bring price to 0.09940 area here. That's the next target, and then we will need to see if this level of support here, which acted as a support on Friday, as you can see, end of Thursday and Friday, but the sequence of measure move lower is still working. So if we complete the first target and we go to the second target, then this pair as targets below previous lows as well. And finally, the OC, the Australian dollar versus the US dollar, we have on the weekly chart, we have this long setup here, which is holding price now in 2011 and through 2012 as well. And so we have potential targets higher, above previous highs here. On the daily, we can see that we had a move higher, which has been reacting to this level here. That was in December as well. Was able to push price higher, but not as high as to decisively break previous highs here and bring price into the 106.80 area. That would be the target of this trace. Now on the daily, there was a confirmation in the last weekend, and I've also provided a trading plan which is still actionable probably, and price actually interrupted, broke the sequence of measure move lower into this level of support in the 103.70 area, and that's where we are probably going to see a move into the upper level of this sideways move that is going on since December in the 105.80 area, and price could actually also continue higher into the 106.80 area. So this is what I see on this pair, and maybe there is still a time to take a long here if price comes back to 103.70. I don't expect that, but if we get that again, then we can use the Fibonacci stalking technique to entry this long, and this would be a very good reward to risk. I made a calculation, could be 6 reward to risk equal 6, which is very good. I hope this whole video is useful. I wish you a very good week, and I hope you can profit from the information I'm giving here. If you want to get up-to-date trading plans, just subscribe, go to the website, subscribe my free newsletter. On the left side you'll find a picture. It takes only a few seconds to do that, and you will get my updates on these pairs. And you can also follow my blog, where I every now and then I post some timely updates and trading plans on these pairs. Thank you very much for your attention. I wish you a very good week, and I look forward to see you on my blog. Bye bye.